We have with us Mr. Mahesh Balasubramanian, Mr. Mahesh Bala as we call him, who is the MD and CEO of Kotak Life Insurance. He's always also headed Kotak General Insurance earlier. Prior to that, he has the Kotak Bank experience, and apart from other experiences in Chola, etc., and he's also been in the startup world, being among the initial founders of apnaloan.com. So he becomes the right person for us to actually talk about digitization because he's seen various generations of digitization. So I'd like to invite Mahesh. Mahesh, thank you very much for giving your time. Good afternoon.
Good afternoon, Ganesh. Thanks for having me here. Hope I can add value to your
Yeah, your
perspectives.
experience of multiple BFSI sectors and the genres which you have seen, you actually are the best person to speak on various aspects, in fact. So, first question I'd like to ask you is actually, do you think our Indian insurance system is fully digitized? Digitized, I mean. If yes, where do you see, and if no, where do you see the gaps? Yes, sir?
All right. See, for me, digital is a combination of multiple things. If you look at digital, I would say first digital as a vertical, right? Digital as a horizontal, right? Let me explain to you what these two mean.
Okay.
Digital as a vertical primarily means acquisition of customers digitally, where we really are able to offer our products out there. Customers come in like the way Amazon does today, or Flipkart does, or any of these customer-facing portals or customer-facing applications do it, where the products are put out there, customers come, which is largely disintermediation, where we go direct to customer and are able to offer our products direct to customers, right? That is one aspect of digitization, because that's truly where customers come and purchase our products end-to-end digitally without any interface. It's like booking an airline ticket or buying something in Amazon. What do you do in Amazon? You go, you feel a need for a particular product, you go and search for it on the Amazon website. You're able to see multiple things, compare multiple things, product features are listed, the ratings are listed. Then you go, you want to purchase it, you put it in your cart, you purchase it, and then you start tracking delivery and the product reaches home, right? This is the way Amazon does it, right? So this is a direct to customer experience that Amazon provides. So that is for me one aspect of digitization. Second is digital as a horizontal in our own companies in terms of laying the pipes so that we are able to do paperless transaction. We are able to reduce our customer responsiveness time or turnaround time as we call it. And how do we give a customer end-to-end damn good experience when he's dealing with us in terms of the promptness, in terms of the scalability, and in terms of the reliability of the services that we provide. This can be for purchase journeys, this can be for policy management journeys, and this can be for other service requirements. So if I have to put these two as an L-shaped model, digital as a vertical, digital as a horizontal, I would say digital as a vertical on the life insurance side, we are still yet to evolve, right? We are way behind the curve.
The marketplace.
Yeah. Not only marketplace, I'll tell you why, I'll come to that, why I believe we are yet to evolve. Digital as a horizontal, I think we're all doing pretty well, I would say, because the pandemic really brought to fore the digital capabilities of life insurance companies. Today, sitting where I am today, is it possible for me to absolutely offer a customer a policy without collecting a single document from him? Answer is yes. We are able to digitally onboard customers using Aadhaar, eKYC, CKYC, using account aggregators, using all the other digital interfaces, JAM, Trinity. We are able to get in a customer and key in some information in a particular front-end device. Either the customer does it or we are able to do it, right? And thereafter, we are able to do a digital video verification with the customer, digital NACH, digital payments, digital eNACH setup, right? And then, as I said, we can even have a video FMR if it is required, right? And thereafter, the policy also gets digitally delivered to the customer. And thereafter, the customer can service his requirements. Today, I would say we are very proud at Kotak Life saying that our digital enablement and services has gone up dramatically. Our instant servicing is today almost 75%, where services which can be instantly serviced, 75% of them are digitally serviced instantaneously. Somebody wants to come in and do an endorsement, somebody wants to come and do something in his policy, existing policy, he has some requirement, he can actually come and do it himself. And 75% is our instant servicing of service requirement, which can be done instantaneously. Right?
So you would segregate onboarding and servicing and risk management?
Yeah, so risk management as well. We all run a dynamic risk scoring model at Kotak Life. We have been running it for quite some time. As soon as the customer onboarding happens, it goes and hits the digital risk scoring model, comes back and says yes, no go, etc. Persistency, we have brought in propensity models where at the time of onboarding itself, I'll be able to know whether this customer is going to be red, amber, green on persistency, right? So I think a lot of work has been done in all this, right? So I would say the digital as a horizontal, we have done better. Are there gaps? Of course, there are gaps. I'll discuss what all we can do and what are the gaps today, right? Digital as a vertical on the life insurance side is yet to take off, right? Because there is too much of friction in what we do. Secondly, we are a difficult to sell category. Life insurance is a difficult to sell category. Everybody still says that life insurance is bought, not sold, right? From a difficult to sell
Sold,
category,
not bought.
we have to transcend to a easy to buy category. We are now trying to make it easy to buy. So there is difficult to sell, easy to buy, right? Difficult to buy and easy to buy. So we are somewhere in the easy to sell category, but we are still selling, right?
It's a sell
Can we
product.
move it to a buy category, right? On the general insurance side, things are moving at a slightly faster pace because of the fact that those products are simpler, easy to understand, transparent. They provide a very, very simple level of service. General insurance may what? You take a sum assured, you collect a premium and you tell the person, if something happens to you, I'll take care of you. Whereas our products have returns, par, non-par, unit link, savings, retirement, pension, term. Our products are a little bit more complicated, complex. Therefore, it needs face-to-face selling, right? So I think that's where the journey is as far as we are concerned. That's why I said digital as a vertical will take much more time to evolve. Digital as a horizontal, I think we are doing pretty reasonably well. Can we do more? Answer is yes.
So your answer shows your varied sectors. So I would like to, in fact, elaborate. I ask you to elaborate more because you come from various sectors of BFSI. So banking, GI, and now the LIPs. So you mentioned something about GI and LI, which is true. We can elaborate more like which is more digitized and which is easier, and any experience which you can say this is a wow types in that sector.
No, I
compared to
think
this one.
the pandemic really threw open the digital prowess of the insurance companies in India. Right? In fact, I was on the GI side for the first half of the pandemic. Second half, I moved to LI side. Right? First of the pandemic, I think in GI, in fact, I remember that 24th or something, the country went down, and then we were all doing year-end closing. Then we finished our annual books closure, audit, etc. Claims were going up simultaneously. Health claims were going up, but everything was done digitally, not without a single document collected from the customer. Everything was done digitally, right? I think the pandemic threw open the digital prowess of companies, and I think everybody came through fantastically well, right? So I would commend the industry and say I think almost every insurance company on the street, right, did a very good job during pandemic in terms of quickly transforming themselves into converting the workflows to completely digital. I think all those tools were there. The usage was less because people were used to doing it the physical way. But when we had no choice but to do it the digital way, I think utilization went up dramatically, right? So I think that phase entirely proved that digital works, and the progress of companies was proved. Where the gaps are, if you ask me, Ganesh, I think today the entire industry, if I look at the lending industry vis-a-vis our industry, insurance industry, I think use of data available in the ecosystem, data analytics. This is where I think we are really primitive as an industry. We can do much more, and I can give you many examples of how, if data is available, right, we can really provide better risk. You spoke about risk management. Risk management today we are unevolved because we are not using data which is available in the ecosystem. Let me give you some examples. 2007-8 was the Lehman Brothers crisis, the global financial crisis, right? That's the same time when India was hit very seriously by a retail lending problem. Because there was excessive leverage in the front end. A lot of people had gone into the unsecured lending platform, whether it is STPL, we used to call it STPL at that point of time, small ticket personal loans. A huge amount of leverage happened in that time, credit cards, etc., because there were multiple borrowings. Customers were borrowing from multiple people, and there was no visibility of who's borrowed how much, right? And a lot of people were.
Bureaus.
I'll come to that, right? At that point of time, credit bureaus were there, but they were not mandated. RBI had not mandated banks to necessarily send the data into the credit bureaus. That singular act, where credit bureaus became very powerful and all data went into one place, and the credit underwriting happened on the basis of a score which came out, right, from any of the credit scoring companies, right? That score provided very rich information on the customer's credit score, his leverage, how many loans he had taken, what is the kind of repayment patterns he had, whether there was any existing defaults, etc. That singular act, I think, fired the retail lending industry. If you look at the growth on the consumer bank side and retail side, right, has been spectacular since then. In fact, today morning there is an article, I think, in one of the newspapers by, this guy Bandopadhyay, the famous writer. I probably forgot his name, right? If you see today, There are 26 listed entities in the banking sector who have an NPA of less than 1. This includes public sector banks, private sector banks, and small finance banks. How did this happen? It's because of better credit underwriting. That happened because data was available. In the life insurance industry and GI industry, that's where they kept us.
Even with IIB?
IIB is there, but I think we have to probably leapfrog in terms of what IIB can do and what industry can do. Because even today, I don't think everybody is sending in data across all companies, all formats, all requirements into a central database. Let me give you an example. There are people, we ran a project on the GI side many years back, Same guy has died in 10 insurance companies' cases, right? Across 5 years. It's true, right? You do a dedupe and see, same fellow has died in third-party claims.
Yes.
Right? He's died 5 times across 10 insurance companies across 5 different years. Right? So I think a lot of fraud is out there. And to my mind, risk has to be underwritten taking into account mortality and morbidity. For instance, if I'm an insurance company, if I know the insurance score of Ganesh Iyer, and Ganesh Iyer's insurance score is, let's say, 7 on 10 or 8 on 10, right? Or 8, like the way we have a credit bureau score of 650, 750, 800, right? Let's say Ganesh has a score of 800. Then we go inside and see Ganesh's insurance report. Ganesh has not had a single incident of motor claim. He's been having 3 motor insurance policies.
So you mean insurance?
2 motor insurance policies, yes, 2 motor insurance policies, not a single claim. He's been holding 2 health insurance policies, not a single claim. This case comes to me for underwriting for life insurance. What do you think I will give Ganesh as an underwriting limit or a sum insured limit? Because Ganesh is extremely conscious when he drives his car. Ganesh has been having a health insurance policy but never made a claim, right? Therefore, that data is very rich for me.
So you are saying we should not look at insurance in isolation.
We should not look at life insurance in isolation, right? So this is the case, as opposed to somebody who's had 5 claims in the last 5 years in auto insurance, right? He's had 2 claims in the last 5 years in health insurance. That risk from a mortality perspective, when I write, is very different from the risk that Ganesh is, right? So why can't this information be made available to everybody? After all, it's the same ecosystem. All 50 companies are operating in the insurance space in India. Why can't the data be pooled and the data be made available for everybody? If I do this, my underwriting friction will come down, my risk will become better, pricing will come down because loss ratios will come down, right? We all know that 25 to 30% of the industry is hit by frauds. Frauds will go down. If frauds go down, obviously pricing will go down because I don't have to provide for those frauds, right? Obviously, in the lending sector, if NPAs go down, provisioning requirements go down, I'm able to offer a better rate to the consumer, right? So therefore, this will unleash a whole new dimension as far as our risk writing goes. So data and digital have to marry with each other. Today, digital prowess is very high. Data prowess is all done by individual companies using their own data. To some extent, IIB data is there, I agree. We all go and do a dedupe before we give the sum assured, but that's only a small portion of the things that can be made.
All companies are not contributing.
And the amount of data has to be cross-functional between life and general, motor and general, health and general, right? Everybody, we should look at one insurance.
I can see the glare in your eyes when you're speaking about
So that's the opportunity. Today when you lend, I know your credit card details, I know your home loan details, I know your personal loan details. If you borrowed from NBFC also, I know. If you borrowed from a bank also, I know, right? So I'm saying that data is very rich. And that is what is missing in the Indian insurance ecosystem. If you plug that in, I think with JAM, Jandan, Aadhaar and Mobile, and with the amount of digitization which has happened already, I think we should be able to all offer better products, better customer experience, reduce our risk, right?
True.
And offer end-to-end digitized products where customers can just seamlessly sit in your house and finish the whole exercise. 80% of the customers should be able to get a policy across the table.
So, continuing the glare in your eyes and the fear which was the fire which was there. One example which you can talk is, this was an amazing experience I did in the last 20-30 years. You see,
lots of stuff. In GI, in fact, for the first time, we started coming in and say, okay, we will issue policy instantaneously. As an industry, we did it, Kotak General Insurance also did it, right? Because nobody had really thought of issuing a policy instantaneously to a customer, right? Otherwise, normal thing was you fill up a form, give the form to the insurance company, that fellow will take it, you give a check, you cut the check, then there will be underwriting in the head office, proposal form will go somewhere, either digitally or this thing, somebody will underwrite it, somebody will approve it, and then the policy will get issued, etc. All this was an extended cycle taking 3 days, 4 days, depending on the insurance company. We said pre-underwritten products. We will offer instantaneously the policy. So I think that fired the entire imagination of the industry. Today, your two-wheeler policy, your travel policy,
Even health
in
to
one
a
session it's completed.
Even health to
Health
a
insurance, Kotak Life, even today, we are offering 30% of our policies are issued within 3 hours. Right? So that is on the policy issuance side. Second, claims side. Right? Today, at Kotak Life, proud to say that all our policies are 100% digitally settled. And many of our policies are settled within minutes. You upload the data, it is settled. Right? So therefore, I think we have all reached a certain level of sophistication which we are very happy about. Right? The world has come a long way. I think 2-3 important enablers, if you ask me. One is Aadhaar and JAM has been phenomenal. When I started in 2000 in Apna alone, we all knew that something like this will come. And we thought it will come in 2001, 2, 3. It didn't happen. Many of us were digital evangelists. I really dreamt of giving a car loan to the customer where the customer does not have to step out of his house. He's seen the car at the dealership, he comes home, right? Logs onto a website, fills up his entire form, right? Whatever. We at the point of time thought that will be a social security number, which turned out to be Aadhaar later on. We thought that document repositories will be there, DigiLockers would be there, and we'll be able to underwrite that case immediately. And we also thought ENACH will happen, NPA, direct debits will happen, RTGS, etc. All that would happen. We had envisaged all that and said we will deliver the contract also digitally signed, and the customer can sitting in his house if he starts the process at 6 o'clock, by 7 o'clock his loan is approved, documentation done, he can go to the dealership tomorrow morning and take the car.
Fortunately and unfortunately, you were ahead of time.
Yeah, we were way ahead of time because the digital enablers are not taken long. Today, I think that's where the jam reality and the fact that digitization has happened and documentation records. Even today, there is much more to be done. For instance, health records, death registries. Today, you know how much we suffer to pay a claim. A claim comes, we all have to go chasing around, getting the death certificate, whether it is validated, not validated, whether the death certificate is genuine, whether it is issued by a proper authority. If all this was available in one place, death registries, I just need to go Google into a death registry, death certificate is there, I confirm that is the date of death, and I clear.
Again, you're ahead of time. I was going to ask this question.
Yeah.
Right. So,
land records for underwriting GI, right? If I need a factory, if I'm underwriting a house, land records should be available, property records should be available. I think repositories, see, data is the key if you ask me, right? Digital prowess is there, we all have journeys, etc. Data is the key. The second leapfrog is generative AI, which we'll talk about it maybe in due course.
Since we're talking about data availability and usage, do you think the new data privacy norms will impact us significantly?
It will impact significantly, both good and bad, right? Good in the sense that if the consent is there, then virtually I'm able to provide a much better level of service because the customer is giving me the consent to go and fetch his data from wherever it is.
But consent is likely to be very, very implicit.
That's
it's not going to be generic.
No, so that is why. So we have to see wherever we are able to take explicit consent, right? I think the digital journeys and this thing can really bring in huge amount of better customer experience, right? At the same time, the law is also very clear: misuse of data, cyber security threats. If you mess around with data or the data is not handled appropriately, properly, with responsibility, accountability, security in mind, then I think the data providers or the data holders, right, will have to face the fact. The bill is very clear. If you mess up, it's very onerous on you. At the same time, if you have take consent and do it very well, it's like driving on the road. Yeah, highways increase the speed of the traffic. Accidents, if it happen, can be ghastly. But then you have to make sure accidents don't happen. 90% of the population or 99% of the customers get better.
True. But I think execution, there would be gaps probably. I think
it's an evolution, isn't
it?
Everything goes through a evolution curve.
Teething issues will be there. But
to my mind, it's both an opportunity and a responsibility.
Because now wherever I'm talking around right now, everybody is like, DPT आएगा तो क्या होगा? DPT आएगा because people are sitting on data mine. They are unable to mine it because now when they are able to mine it, the DPT is like, do I have the consent?
So I'm saying first of all, without consent, you have no business to look at DPT's data. That's the customer has to decide where his data should reside, how his data should be used, right? And what is it that the customer has to decide the value he wants to extract from his data. I don't think we as insurance companies or data users, right, can dictate terms. So very clearly, it's the customer's data, he decides. But once he decides, you provide the best service to him.
Maybe last but one question I would say is, do you think the industry, is still, the insurance industry, is still looking at digital journey, onboarding separate and risk management separate?
I don't think so. Especially on the LI side, GI side, if you're writing risk has to be written at the time of policy issuance, right? So therefore, where is the question of these two operating in a disjointed manner? It has to be a connected manner, right? If you don't connect it, your turnaround times are going to suffer. There is going to be a takeoff and handoff, right? What happens? I'm saying, suppose I'm not able to underwrite a risk with data available, there will be a stop start. Up to a particular journey, I'll do it digitally. Then, hey, hold on, let me go check other things, right? Because risk is risk. We all have to underwrite the risk, right? So therefore, there will be a break in journey, and then there will be a turnaround time issue, and the customer experience will go down, right? So both have to merge. But again, for risk, data should be available. So it goes back to data. Insurance companies would love to do more and more risk modeling, provided more and more proper data is available, right? So is it today operating absolutely in conjunction? Answer is not yet fully. Some of us are doing a little bit of it, but I think the whole thing answer lies in data, my friend.
Correct, because unfortunately, the handshake is not completely digital with the customer, specifically tier 2, tier 3, tier 4 cities. Okay, and because that's the experience which I see. That's the reason I asked you, because onboarding ho jata hai, but risk management, some part, because of non-availability of data, we are still not sure. So whatever propensity modeling, scoring model we do, we have the red, amber, green. Red is clear. You will not underwrite unless you are sure. Green is you will go through STP, but the amber, which is a unfortunately bigger proportion.
Yeah.
So we want to use the section 45 thing, let me issue and then see. So then see may probably different companies have different approaches.
Well, I think as the key to my mind is data. If more and more data is available, better risk models for you.
So as an industry, as the CEOs, when you're meeting together at the life council level, is something happening on this front?
Lots of stuff happening, right? In fact, all of you must be aware that something called Bima Sugam is coming, right? In Bima Sugam, some of this is what we're all dreaming of and wanting to execute, where all the data is available in a particular ecosystem and all that. I think, so wait and watch. I think a lot of stuff is happening. Hopefully, we pull everything together and we'll be able to move to a very different level of experience for the consumer. Options and experience for the consumer.
So one last question, Mahesh. I know you for many years, your dynamism, your speed, your execution levels are very fast. So you're the cheetah, I can say. So when you're looking at it, and you used the word generative AI, so I know you have something in mind. So I would like you to say, how would you like, of course, a lot of you already spoken that data is a thing and we need it. So how do you see, when I'm talking about it, I'm also talking about seeking support from the ministry or government or whoever, or the regulator, and say that, okay, can we do this? Ye karega to maza aayega. And we
I think honestly, we are going through one of the best regulatory regimes, if you ask me. I think there is clear amount of vision, dynamism, wanting to do things across all regulators. So I think I don't think regulatory environment is a big challenge. There could be challenges for the particular proposal, something you want to do, etc. But overall, I think the level of openness and the level of drive that we are seeing from regulators in the last few years is extremely good, right? I think it's a question of we being able to use these technologies at scale, use these technologies at the economics of scale that we want to do. For instance, generative AI, everybody's talking about. We hope and pray that in the next 6 to 12 months, we will see this operating at a level. Because all of us have been doing parts of it. RPA, all of us have been doing. In a way, that's also, you can call it generative AI, but AI, ML, we've all been using. Without probably using the same terminology, but we have been using it. Models have been used for risk, models have been used for persistency, RPAs have been fired for many of the processes, right? We have been able to eliminate. All of us are doing various things. All that comes under the umbrella of now AI, ML, and under the next generation, generative AI. But where generative AI can really, to my mind, change the landscape of the processes and systems is that I think a lot of our processes today are people dependent. We do not see wherever repetitive work is being done and wherever data or information is available plenty, right? And those are repetitive works, right? Not too much of ideation is required, or too much of differentiation is required, or too much of new thought is required, right? Those areas will all get done, right? For instance, you want to make a product brochure, right? In your product, you have 10 features. These features are available in other products of yours, right? Let's say critical illness there, ADB there, return on premium there, waiver of premium. So you have 20
like a modular thing.
Yeah, you don't need today. If you ask a product guy, the team will take a lot of time to prepare. In maybe 3-4 hours, your brochure will be ready, right? You just fire the model, it will pick up everything and say this is the brochure along with the grade, right? You can now choose whether you want to use it or not. Similarly, the call center. at the call center and servicing, repetitive requirements keep coming, right? The same day there may be 100 customers asking for the same thing, 200 customers asking for the same thing, right? So where the call center today takes each of this as one separate one and tries to address it, it's all repetitive work, right? So if we can really use the generative AI capabilities and put it on a self-learning model, right? I think many of your processes will undergo a massive change, right? Because then customer can do it yourself and it can do it in multiple languages. Look at Bashini, look at multiple languages. Today, am I able to service a customer in Gujarati, right? I have to divert it to a Gujarati agent who can do it, right? Because we all use vernacular. Today, there are Kalpa in our own company has got at least 12 languages we are supporting, 10 to 12 languages we are supporting, right? But then it's still human dependent, right? But whereas today technology is available where I can speak in English and we get translated in Gujarati at the same time, right? And with a great deal of accuracy, right? So I think these are the things which will change the landscape of our customer servicing, right? Customer sourcing, customer servicing. It will take it to a different level where it will be a very immersive experience for customers, right? And it will eliminate a lot of repetitive work that we are doing, which will bring in productivity, which will bring in better customer experience. But all this will probably play out in the next 12 to 24 months because these technologies are available today, but the price at which it is being delivered to consumers, the economies of scale, the unit cost going down, these are the patterns one will see happening over the next maybe 12 to 24 months or 36 months. And that will change the landscape significantly.
Great. Thanks. I think there's a real value add, and I could see your various sectors coming in, the various genres in which you work. So thanks, Mahesh.
Great, Ganesh.
Great.